All right, guys, we're just going to give it one more minute to see if anybody else registers.
Okay, Taylor, I think we'll probably get rolling.
Yeah, let's get rolling. All right. Hello, guys. I'm Tyler Hanson. I'm with Art Jetter and Company. This is James Leary. He's with One Protection. I'm going to be introducing him as the presenter on this. It's a really good tool, a lot of resources for selling DI. And yep, I hope that the resources and the software helps with you guys. And if you have any questions or want to chat, I've opened the question boxes. You guys are welcome to send anything and we will answer it for you. All right, James, take it away.
Hey, sounds good, Tyler, and thanks everybody for being on the call today. What our company is we're just a disability insurance presentation software company, and we've partnered with Jetter. I mean, Jetter is really, really good when it comes to, finding the right carrier fit for your client and your DI case profile, and getting those illustrations put together and getting that case processed through underwriting and all of that stuff for sure. But what we find is the biggest problem in the disability insurance marketplace is the effective tools to educate the client and better position and present this stuff to the client. And that's what we're going to hone in on a couple things here today, but that's going to be kind of the bulk of our discussion today. But I'll get started here. What happens when you're not proactive with income protection planning with your clients? This is such an incredibly critical area. Here's an example. Here's Tim and Jenny. This is Jenny having a hypothetical call with her advisor, Joe. And it goes something like this. Joe, this is Jenny Smith. Tim just had a stroke and I'm not sure when or if he'll be able to work again. What do we do? And here's Joe. I was not prepared to handle that phone call as their financial professional. This is a rough position to be in. And I can, without a shadow of a doubt, I can promise you there is an advisor or insurance agent somewhere out there today, right now, having a phone call like this with the client or the client spouse, and they don't have really any good answers for the client. So what typically happens next here, see, even though Joe has done a good job at helping Tim and Jenny out with savings plan, investments, other insurances, college funding, etc. But again, where's Tim's disability insurance plan here? What typically happens next is the clients will lean on friends and family for help. They have a fire sale. They raid their retirement or investment portfolio. Typically, it's a combination of the three. None of them work very well. That's where DI planning comes into place, is that type of scenario right there. Another way to look at it is think of your client's income as the going into their financial tree. Here's an example. That income flows into your client's financial tree, and it's going into all these different types of branches, right? Well, if that income stops or goes flying out of there due to an unexpected health event where the client now can't work, well, what happens next? All these branches of the financial tree just kind of start to dwindle away. And pretty soon, your client's left with a tree that looks like this, real nasty looking. Health events are the leading cause of bankruptcies and home foreclosures year in and year out, ever since I've been following that statistic, coming up on 26 years now. So this is a really, really important thing to help your clients solve, so you're ready to handle the phone call should your client have a future health event. They must be prepared for it. Some things that are key here when it comes to disability planning techniques. It's very hard to fix a problem for your client that they cannot visually see. So much so that visuals are 60,000 times more effective than words or text. Powerful visuals help you grab your client's attention, creates clarity for them. It triggers emotions, and it increases their motivation to do something about a problem. See, when we're not using powerful visuals, if we're just sticking to, DI case illustrations as an example, is that grabbing the client's attention or creating clarity or doing any of these other things? No, it's usually doing the opposite of that. Showing a client a 16 or an 18-page report of an illustration with all these words on it that they've never seen before, extremely difficult to translate that information to the client. And that's why most advisors who have tried to get proactive with DI planning tend to struggle with this. And they know it's important, but their closing percentages on it are just really, really low. Let's talk about some tools now, and we'll get into this. It's kind of a joke here, but would you rather use this tool over here to the left to cut grass, or this tool over here to the right to cut grass? So kind of obvious here. You're going to want a really nice John Deere tractor that's precisely built for the job. And that's what we're trying to deliver here. I'm going to show a case profile just to give everybody a real nice sense of what this accent looks like and how powerful it is. There's a few different case profiles I can highlight here. I'm going to stick with this business professional one here. Just covers, it's not overly complicated, and it covers some nice angles here. We have a 35-year-old. They're earning a $100,000 base salary with a $50,000 bonus or commission income, and they have a group LTD plan through their employer. So that's the basic case profile that we're going to present here today. Now, as this is pulling up, I can't stress this enough. This tool has a lot of different things you can get into, but you can boil this thing down into just one or two graph outputs depending on where you're at with the client. But I'm just going to do a quick A to Z walkthrough here on this, just to show the full capacity of it. Okay, first, it's all about techniques here. First thing that's critical is this right here. Helping your client understand the value of their income over the course of their entire career. See, most clients only think of their income from a monthly or annual perspective, and that's it. We have to change the thinking of the client right away and grab their attention right away with this. I'll just refer to this client as Billy. See, Billy client here is making $150,000 a year. That's one number, but if you look at that income over the course of his career, assuming a 3% increase or growth on that income, all of this is hyper customizable to the client, by the way. These are just the inputs that I have plugged in. Here's the punchline though. $8.2 million is that income stream over the course of Billy's entire career. That's a number he's never seen before, and it grabs the client's attention right away and sets the stage for the rest of this moving forward. Next. I think it helps to make the unknown known by using the familiar. Well, what do I mean by that? What's the client already familiar with? Everything that they're already insuring. So maybe Billy client here is in their dream home that's worth $600,000. Maybe they have a cabin, a used Suburban for $75,000. I know that's ridiculous, but it's the truth. A couple other things here. Here's the point. Clients are insuring things like this all day, every day, and not even thinking much about it. And 9.9 out of 10 times, the client's going to believe that their home is their most valuable asset. Well, let's bring in that income value now in comparison. Look at how much more valuable the client's income is here in relation to everything else that they're insuring. It's the source that makes all of these other things even available here and on the screen in the first place, is their income and ability to work, earn, and grow that over the course of their career. So what we're focusing on here from a technique perspective is positioning the income value and getting that client to really wake up and say, okay, I see this now. My income is my most valuable asset here that I should be protecting, especially if I'm protecting all of these other things with insurance. Okay, next. I already have the coverage through work. I'm good to go. Advisors get that objection, that knee-jerk objection or response from clients constantly. Now, there's all sorts of ways to preempt it and mitigate that before it even happens that I'm not going to get into today. But what we are going to get into is making sure that client really truly understands how that group LTD plan, as an example, is positioned for them from a maximum coverage and taxation perspective, because they don't know, and it's your job to educate them on that and teach them on why we're having this conversation. So here's our example. Got Billy here. Again, he's making 150, 100,000 of its base salary. Well, geez, what's Billy's group plan here? 60% of the base income only. Doesn't cover the bonus or commission income, very common. What's our problem? Yikes, we got a $90,000 gross annual income loss. Let's break this down to net. What if this is a taxable group plan? Most of them are, or a fair amount of them are, depending on how they're structured. So now let's go from gross to net here and give it an estimated net breakdown. When a client's going through some type of health situation, the last thing they care about is their gross numbers. They want to know, okay, what is the amount coming through the door here that I have to work with? That's where we give it an estimated net breakdown here. Here's the point. It's a $68,000 gross or net annual income loss, or from a monthly perspective, look at that. It's about $5,700 per month. That's right in their nose right there. Hey, Billy client, honestly, how long could you go losing $5,700 a month in net income before we run into an issue here if we're only relying on your group LTD plan? It completely wakes the client up differently than anything else on educating them on their existing coverage. Remember, all good planning first starts with helping that client fully understand what they already have in place, especially from a group benefits package perspective. Of course, we're focusing on disability insurance here. Ultra important. But this starts to demonstrate that problem to them very effectively. Next, income loss scenarios. How do we take what we just highlighted there and put it into the most realistic terms possible? Here's probably the two biggest takeaways of today. Number one, when do most, from a carrier claims perspective, when do most health events happen? In the 50s. That's when carriers tend to pay the most claims out on DI policies. What's the average claim duration? Depending on the carrier, typically 3 to 4 years. So think about that here as we get into this. So here we have, Billy client example here. He's 35 years old. He's making good money. He's healthy. He's married. He's got a couple kids. Everything in Billy's world right now is going great. Is he thinking of a health event happening tomorrow, next year, or 5 years down the road? Not even a chance. His optimism bias is high. Optimism bias is a root cause of all objections here. So think about that as we go through this. Billy, it's not about tomorrow or even 5 years from now, but what if you had a health event later on down the road at age 50, like your dad did as an example, and you were out for 3 or 4 years? See, even with Billy's group LTD coverage here, it's got a $640,000 income loss. Where's that money coming from? Would that be a problem for Billy and his family? Absolutely. What we're looking at right here, folks, this 3 or 4 year health event type of a scenario in the 50s, give or take, but typically in the 50s, this right here is the leading cause of bankruptcies and home foreclosures year in and year out. Unexpected medical events spike dramatically in this age range here. Those average claim durations typically look like this. Regardless if they have group coverage or not, these are massive income loss scenarios that the client's dealing with and typically lead to a bankruptcy or foreclosure situation or a complete eradication of their retirement savings. What if this lasted a little longer? Now we're at 1.5 million. What if the client can't recover here? Billy client can't recover. We're at a $3.8 million income loss. What if that group plan went away? Take that out of the picture. Maybe Billy wants to start his own consulting company a few years down the road. Well, as soon as he does that, that group plan is long gone. So now something happens in the future and he's not covered. That income loss drastically increases even that much more because of it. Here's the big takeaway again. Health events tend to happen in the 50s, more times than not if they do. Average claim duration, 3 to 4 years. If that's the case, then why not demonstrate that type of problem over and over and over again every day to your clients? That'll get them thinking completely differently about this, number one. Number two, we get away from statistics here. The more statistics you throw at clients, the more that gets their guard up. This becomes more of a consequences conversation. Should you have a future health event, Mr. and Mrs. Client, or Billy Client in this example, we don't have adequate coverage in place. Changes the whole dynamics of these discussions. Okay, next. The technique of presenting new plan solutions in a way the client can easily understand. And here's where Jetter comes in and does their magic behind the scenes. Got a case coming up, you got some general client data, and you want to show some new plan solutions. Well, what we want to do here is, through Jetter's expertise, find the best carrier fit and show 2 or 3 coverage level options with that carrier. A lot of advisors, I've seen them make this mistake 1,000 times. They'll show multiple different carriers on some spreadsheet or multiple illustrations. The client doesn't even know they have a problem yet, and we're heavy language and riders and carrier nuance type conversations going on. That client starts to shut down, and when you have a confused mind, that rarely leads to a path of the right decision. They just kind of close off. They say, well, I'll think about it and get back to you. And then that DI case opportunity is long gone. So one carrier, the best fit, 2 or 3 coverage level options. Simple but powerful. Let's walk through this. So Billy's income here, 150. Hey, Billy, now here's your group plan as our base layer. Good we have that in place because it works as a nice base layer. Here's what a comprehensive plan might look like for you on top of that. Maximum coverage, $66,000 a year. Here's the premium down here. That's it. Coverage, premium. Simple. Clients can easily get their head around this. Here's what a moderate plan might look like. A little less coverage, a little less premium. Still an okay plan. Here's a basic plan. Quite honestly, completely inadequate for this client here. Just kind of highlighting it as a reference. More to come on this here in a couple minutes. Let's bring in Billy's current plan here. Just the group. This puts it all into perspective. Now let's look at income loss associated with these new plan ideas from a gross annual perspective, but most importantly, You can show clients a net breakdown here, which is critical because a lot of group plans, at least in this case scenario, is a taxable benefit, but these individual plans are tax-free. So when you give that an estimated net visual here, looks like this. Those numbers sync together, super powerful. And then you can do a monthly breakdown here as well, depending on what resonates with the client. Simple beats complicated every time. The client can easily get their head around this. Also, when you're at this stage of the DI conversation with clients, you really don't need to take it too much further than this. We've demonstrated their or positioned their income value as a start. We've demonstrated their problem in the most realistic terms possible. And now we've presented some new plan solutions in a way they can easily understand. See, the client here is not approved for any of this. These are just preliminary numbers. Tyler and his team at Generate have worked up for you, so we have an idea of what route this could go, because the client's going to want to see some ideas and some options. Usually the next step here, hey, Mr. and Mrs. Client, what would you like to do? Well, geez, what do you think I should do? Oh, well, let's try to get you qualified for the comprehensive plan here. We'll get you pre-qualified, and depending on how that comes together, we can fine tune everything from there. But until we take that step, this is all just conversation here. So 9 times out of 10, as soon as you get confident and good with this, your client's moving forward with that underwriting process to try to get approved for an adequate plan here. There is a couple more outputs here. Get into a lot of DI techniques with them. They're more advanced for sure. So just keep that in mind. But let's highlight them because it's some pretty powerful stuff you can do with this. Coverage scenarios. This looks a lot like that income loss scenarios output back here, but you can do a lot with this. Let's just create a health event here. Let's assume it happens at age 50, the client can't recover. Let's flip it to net. Okay, Billy, here's your group plan. Assuming it does what it's supposed to do for you. Got a $3.2 million income loss here. That's a red alert problem. Okay, now what is that new coverage you're recommending, or coverages you're recommending do for the client in this scenario? Let's plug that comprehensive benefit in there. Plug that benefit in. See, that original loss was at 3.2 million. That comprehensive plan benefit would reduce that loss down to about 818,000, significantly different than the 3.2 million. There's still some caution here though. It's always important to highlight that out. But here's the punchline. Client saving 2.4 million dollars of net income here with a comprehensive planning strategy. You're showing the client that here's how the policies work. Here's how it can save your financial future 5 times over if you had a future health event that was unexpected with and without coverage in place. Really powerful stuff. Another thing here that we trained advisors on how to use this is this, showing the other plan designs. Let's plug that basic plan in there. Maybe that client's like, oh geez, I love that small premium. Okay, a lot of times those basic plan designs look like this right here. 5-year benefit periods, super minimal coverage. We see advisors over and over and over again race to those types of plans because they don't want to scare their client away with premium. That is the wrong way to do this. When you show it to them and educate them around it and test it out for them, they see this and they're like, holy smokes, well, I don't know if I want that. Now it puts you in a position to say, yeah, I don't even know if I'd sign off on a plan like that for you. It's completely inadequate to protect your most valuable asset, which is your income. So clients, especially somebody in this type of scenario that I'm kind of highlighting here, will get away from it real quick. Okay, last but not least, we'll kind of close this out. Let's pretend for a moment, this is a really effective DI technique here when it comes to putting premium into perspective. Let's pretend for a moment the client has a comprehensive plan on the books, switch back to gross, never has a health event. Ideally, this is what we want, the client to never have a health event. But should they have adequate coverage and not that health event, See that on the top of the income here, kind of like that dusting off the top of the income? That's the premium. Hey, Billy, it would take your original income asset to where we started at 8.2 million down to 8.1 million. It's has no effect on your overall insurance or financial plan whatsoever. It's like a dusting off the top of the income. Should you have coverage and never need to use it? Versus having something happen and we don't have this coverage in place, we're in trouble real quick. Really powerful way to frame this up. Last but not least, if that client is still really kind of giving some pushback on premium, you can use this benefit cost comparison to help them put things into perspective. Now, remember what the client was already insuring? $1 million worth of things here, home, cabin, etc. Well, what is the client paying to insure all of those items? About 10 grand a year, homeowners insurance, car insurance, cabin insurance, etc. So if some event, a tornado we'll call it, wiped all this out tomorrow for the client, they have it insured and protected and they're good to go. What if, hypothetically, that same tornado injured the client to the point where they can't work again? What's their income protection value in comparison? About $5 million. We'll just stick with the comprehensive plan here. Assuming their group plan does what it's supposed to do, comprehensive plan, one blended number up there of total benefit on a net perspective, that $5 million. What are they paying for that? $2,600 a year. See the difference here? So for a premium of $7,800 less per year, Mr. or Mrs. Client, assuming that crazy tornado scenario happened tomorrow, you're receiving a benefit that's worth over $4 million greater from an income protection perspective. So this is a way to demonstrate things in a way that the client's never seen before. And it helps them put this whole thing into perspective from an income value, from a problem point of view, from a new solutions conversation, and then last but not least, putting the premium into perspective for the client so they understand what they're buying and why they're buying it. This is a way to frame that up in a way where it's the most cost-effective insurance most times, not all the time, but most times. DI coverage is the most cost-effective and important insurance that your client should have during their working years by far. And this is how you do it, and this is how you frame it up. So that's our software from A to Z. Again, this DI planning tool, you can boil these down into 1 or 2 graph outputs. I'm not trying to sell this super hard today at all, but if you're having problems getting clients to move forward with their DI plans, this can completely change the trajectory for you overnight with our relationship with Jetter and their back office support and the presentation tool to help the client take action on it. Through our relationship, any advisor that's a part of Jetter has immediate access to a 90-day free trial period on the software. There's no credit card needed to do that. You can sign up at any time. Then we have discounted plan pricing of $79 a month. This is not for everybody, that's for sure. But for those advisors who proactively really want to become more effective at DI planning and protecting their client's most important asset, this is helping a lot of people out there do it. On average, we see advisors go from 10% to 90+% closing percentages on their DI presentations, day in and day out. If you have any direct questions for me, or if you'd like a one-on-one overview of the software, you can email me here. Here's my email, james.leary@oneprotection.tech. Or if you have clients that need DI conversations right now, you can also email me and I can send you the link to get started on your trial period, and then we do live one-on-one training with you on those cases. But that's all I had for everybody today. I know we had an hour slotted out, so hopefully I can give everybody buy back a half hour today of their day. Tyler, any kind of final closing ideas or thoughts that I might be missing?
No, that was perfect. It's a really good software. James and I have been looking at it and working on getting this presentation, and I've been very excited about it for you guys, the agents out there, you know, sitting in front face to face with the clients, to give them clarification and help them better understand how important disability income really is.
I love it.
Well,
Well,
thank you
thanks
guys.
everybody.
Go ahead, James.
Oh, I was just going to say thanks everybody for being on the call today.
Yeah, thank you guys for joining, and thank you, James, for presenting. If you guys need any questions answered by me, you can call me at 402-330-2900, extension 1033. All right, guys, have a good day. Thanks, James.
You're welcome. Bye now.